Welcome to Educare. So this is practice mock exam 1 section B. Adana died on 17th March 2023 and inheritance tax of 5,66,000 is payable in respect of her chargeable estate. Under the term of her will, Adana left her entire estate to her children. At the date of her death, Adana had the following debts and liabilities: outstanding only mortgage 2,20,000, income tax 43,700 payable in respect of tax year 22-23, legal fee 4,600 incurred by Adana's sister, which Adana had verbally promised to pay. Adana's husband had died on 28th May 2006 and only 20% of his inheritance tax nil rate band was used on his death. It means 80% of 3,25,000 is also available for Adana. The nil rate band doesn't matter at that time was 2,85,000. On 22nd April 2010, Adana had made a chargeable lifetime transfer of shares valued 5 lakh to a trust. So it is chargeable lifetime transfer. Adana paid the lifetime inheritance tax of 52,250 arising from this gift. If Adana had not made this gift, her chargeable estate at the time of her death would have been 6,50,000 higher than it otherwise was. So this was because of the subsequent increase in the value of gifted shares. Now first question, what is the maximum nil rate band which will have been available when calculating the IST of 5,66,000 payable in respect of Adana's chargeable estate? It's simple, we have to consider the Adana's nil rate band, that is 3,25,000, and 80% of nil rate band of her husband, and here we have to consider 80% of 3,25,000, not 80% of the 2,85,000, that is the nil rate band at the time of the death of her husband. Remember that it should be considered in accordance with the time when the Adana died on 17th March 2023. Next question with the same scenario, what is the total amount of deduction which would have been permitted in calculating Adana's chargeable estate for IHT purpose? So whatever amount Adana had to pay is to be considered there. So the amount to be considered is 2,20,000 of outstanding interest only mortgage and 43,700 of income tax. Legal fee which she promised is not considered to be liability by rules. So it is total 2,20,000 plus 43,000 and 700. So this will give you 2,63,700 amount. The third question regarding this scenario is indicate by clicking on the relevant boxes in the table below who will be responsible for paying the IST of 5,66,000 in respect of Adana's chargeable estate, and what is the due date for the payment of this liability. So the date of death is to be considered here, that is 17 March 2023. So here are the options: responsible person, beneficiaries of Adana's estate, no. It is the personal representative of Adana's estate who are responsible person. Second, due date of payment, no. We have to consider the date of death, that is 17th March 23, and after that we have to consider the date of the end of month, that is 31st March 23, and then plus 6 months. As per rule, the date of death, considering the date of death, we have to consider what is the last day of the month and then add 6 months. So this is 30th September 2023, that is the due date for payment. Next question with the scenario, how much of the IST payable in respect of Adana state would have been saved if under the term of her will Adana had made specific gift of 4 lakh to a trust and 2 lakh to her grandchildren instead of leaving her entire estate to her children. So there will be nothing to be saved because saving can be there if she has transfer, or any person can transfer to his or her spouse, then the amount of tax can be saved. Next question is, how much IST did Adana save by making the chargeable lifetime transfer of 5 lakh to a trust on 22nd April 2010 rather than retaining the gift investment until her death? So for this we have to consider the scenario again. So here is the answer. If Adana had not made this gift, her chargeable estate at the time of her death would have been 6,50,000. And if it is 6,50,000 at the time of death, the tax is charged at the rate of 40%. So what is 40%? This is 130, 130 to 60. So it is 2,60,000. But out of this, she had paid a tax lifetime IST of 52,250. So this will be subtracted, and the amount to be payable is 2,07,750. So it is the second option. Next question of section B is, it is Kitten is controlling shareholder in CAT Limited, an unquoted trading company. CAT Limited sold a freehold factory on 31st May 2022 for 3,64,000, which resulted in a chargeable gain of 1,20,700. The factory was purchased on 1st October 2008 for 1,38,600, and further capital improvements were immediately made at a cost of 23,400 during the month of purchase. Further improvement to the factory were made during the month of disposal. The relevant indexation factor is 0.439. Now question about this scenario is, what amount of indexation allowance will have been deducted in calculating the chargeable gain of 1,20,700 on the disposal of CAT Limited's factory? So we have to calculate the indexation allowance, right? So how to calculate this? The original price is given to you as 1,38,600, right? Plus the improvement cost 23,400 multiplied by indexation factor, which is 0.439. So it will be 1,62,000 multiplied by 0.439. 1,38,400 plus 23,600. This is 1,62,000 multiplied by 0.439. This will give you 71,118. So answer is this about indexation allowance. Now before going to the next question, the further scenario, CAT Limited is unsure how to reinvest the proceed from the sale of the factory. The company is considering either purchasing a freehold warehouse of 2,72,000 or acquiring a leasehold office building on 40-year lease for a premium of 3,70,000. If either reinvestment is made, it will take place on 30th September 2023. So we have to consider the qualifying period. All of the above buildings have been or will be used for the purpose of CAT's trade, means they are to be used for business purpose. So this is not about shares. So question is, if CAT Limited decides to purchase the freehold warehouse and makes a claim to roll over the chargeable gain on the factory under the rollover relief rules, what will be the base cost of warehouse for chargeable gain purpose? Remember the rule, if the amount is not reinvested, that is immediately chargeable. If the amount is not reinvested, the gain is immediately chargeable. That part of gain is chargeable that is not reinvested. So here they are purchasing for 2,72,000, and so first we have to consider the amount that has been not reinvested. So the sale proceed is 3,64,000 and the new asset has been purchased for 2,72,000. So the amount not reinvested is difference of these two, and this will be 64 and 28, 92,000. So this is the amount that has not been reinvested. So out of total gain of 1,20,700, out of gain of 1,20,700, 92,000 is immediately chargeable. So remaining amount of 28,700 can be rollover. So this is the amount that can be rollover, right? Again, the rule is that whatever amount has not been reinvested, it will be considered as immediately chargeable, right? And second thing, we have to consider the amount chargeable is deducted from the total gain to find out the rollover relief. Detailed rule is that we have to consider the amount that is not reinvested, that is 92,000, and the full gain, that is 1,20,700. So whatever is lower is said to be immediately chargeable, right? So in this case, 92,000 is immediately chargeable. Out of total gain of 1,20,700 is 92,000 is immediately chargeable. 28,700 can be rollover. So to calculate the base cost, we have to deduct this rollover relief from the cost of new asset. The cost of new asset is 2,72,000, and when you deducted 28,700 from this, it is 2,43,300. That is your answer. That is the base cost of new asset. So the option is here A. So the next question about this: if CAT Limited decides to acquire the leasehold office building and makes a claim to hold over the chargeable gain on the factory under the rollover relief rules, what is the latest date by which the held over gain will crystallize? So we have to consider three dates in this regard. Date when asset is repurchased, the replacement asset is seized. Number one, date when the replacement asset is disposed of. Replacement asset is disposed of. This is the date we have to consider, or the date when we have to consider this replacement asset is ceased to be used in trading. Ceased to be used in trading. And third is 10-year from the date of purchase of replacement asset. So replacement asset is purchased on 30th September 23. So 10 years from that, it will be 30th September 33. So these are the three dates you have to consider, and whichever is earlier is said to be the date when the gain is to be crystallized. Again, the date when the replacement asset, the asset that has been replaced, is disposed of. Second, date when the replacement asset is ceased to be used in trading. And third, 10 years from the date of purchase of replacement asset. So in this question, we have not been given the disposal and date and the date when the replacement asset is ceased to be used. So we have to consider this 10 year from 30th September 2023. Now the next scenario, Kitten sold 20,000 £1 ordinary share in CAT Limited on 5th October 2022, right? On 5th October 2022, she sold 20,000 £1 shares, which resulted in the chargeable gain of 1,42,200. The disposal qualified for the business asset disposal relief. Kitten had originally subscribed 90,000 shares in CAT Limited on 7th July 2013 at a par value. On 22nd September 2016, CAT Limited made a 2 for 3 right issue. CAT Limited, the company, made a right issue 2 for 3 share. So a person who has 3 share will be issued 2 number of shares. Kitten took up her allocation under the right issue in full, paying 6.4 pounds for each new share issued. Kitten also sold an antique vase on 16th January 2023, which resulted in a chargeable gain of 28,900. For the tax year 22-23, Kitten had taxable income of 12,000. Now the question is, what cost figure will have been used in calculating the chargeable gain on Kitten's disposal of 20,000 ordinary share in CAT Limited? 20,000 ordinary share in CAT Limited. So first we have to consider what are the number of share and what is the value of these shares. First, total number of shares are, first they are number of share 90,000, right? Then after that they have been issued 2/3 of 90,000 shares. So total number of shares are 90,000 plus 60,000. So total number of share are 1,50,000. What is the value of share? These are said to be number of share. Now we have to consider the value of share. First, 90,000 share has a value of 1 pound each. So 90,000 pound is the value of first 90,000 share, plus further 60,000 shares are issued at a price of 6.4 pound. So it will be 90,000, 60,000 multiplied by 6.4 plus 90,000. So total value is 4,74,000. Right? So now we have to allocate this value to 20,000 share. 4,74,000 is the value of 1,50,000 shares, and we are to find the value of 20,000 share that has been disposed of. So this will be 4,74,000 divided by 1,50,000 shares multiplied by 20,000 shares. So it is 63,200. 63,200. So option is second. So last part of second question, what is Kitten's capital gain tax liability for the tax year 22-23? So Kitten has sold 2 assets, first shares and second the antique. So she has sold a antique vase, and on this antique vase she has a chargeable gain of 28,900. But remember, that gain is not qualified for business asset disposal relief. While in case of this gain, chargeable gain of 1,42,200, the disposal qualify for business asset disposal relief. So 1,42,200 is a gain on ordinary share, and 28,900 is a gain of antique vase that won't qualify for the business asset disposal relief. So it will be, if we consider 28,900 is the gain on the vase, and as per rule, first we have to deduct the annual exemption amount of 12,300 from this, and this will be 16,600, right? And then gains that qualify for the business asset disposal relief is 1,42,200. So first we have to charge tax on the business asset disposal relief. This is 10%. So it will be 14,220. And remember, if you are choosing the business asset disposal relief, then it means you are sacrificing the unused basic rate band. No doubt this person has an income of taxable income of only 12,000, and she has unused basic rate band. But as a result of choosing business as a disposal relief, that would be sacrificed, and on the other gain of 16,600, gain is to be taxed at 20%. So it will be 3,320. So total will be 17,540. So this is our answer for last part. Last part of second question. So the third question, Alisa commenced trading on 1st January 2022. Her sales since commencement have been as follows. January to April 7,500 per month, May to August 10,000 per month, and September to December 15,500. The above figures are stated exclusive of value added tax. Alisa only supplies services and these are all standard rated for VAT purpose. Alisa notified her liability to compulsory register for VAT by the appropriate deadline. For each of the 8 months prior to the date on which she registered for VAT, Alisa paid £240 per month inclusive of VAT for website design service and £180 per month for advertising. 240 per month and 180 inclusive of and exclusive of VAT. Both of these supplies are standard rated for VAT purpose and relate Alisa's business. After registering for VAT, Alisa purchased a car on 1st January 2023. The car is used 60% for business mileage. During the quarter ended 31st March 23, Alisa spent £456 on repair of the car and £624 on fuel for both her business and private mileage. The relevant quarterly scale charge is given to you and that is 292. All of these figures are inclusive of VAT. All of the Alisa's customers are registered for VAT, so she appreciates that she has to issue VAT invoices when services are supplied. So the first question for this is, from what date would Alisa would have been required to be compulsory registered for VAT and therefore have had to charge output VAT on her supplies of services? So as per historic test, we have to consider when her sale passes the 85,000 pounds criteria. So if she has a sale of 7,500 per month for the first 4 months, the total sale is 30,000. Then she has a sale from May to August, May, June, July, August. This is 4 months period. So 10,000 each, it will give you 40,000. Now she has a sale of 70,000 at the end of August. In September, from September till December, she sold 15,500 worth of services each month. So first, in case of September, if she sold 15,500, then the total sales are 85,500. Means, and in September she meets the criteria. In September she meets the criteria. So the question is to be compulsory register for VAT and therefore had to be charged output VAT on her supplies of services. So we have to consider the date 30th September is the date when she meets the criteria, and 30th October is the date when she should have notified HMRC about this, and 1st November is the date effective for registration. Next question is, what amount of pre-registration input VAT would Alisa have been able to recover in respect of inputs incurred prior to the date on which she registered for VAT? So for services, rule is that previous 6 months services, the services provided 6 months before registration can be recovered. The amount of the input tax on these services could have been recovered. So we have to consider what are the services that are provided. This is 240 inclusive of sales tax. So inclusive of sales tax means 240 multiplied by 20 divided by 120. So it will be 1 by 6 and 40. And then 180 exclusive of VAT. So it is 180 multiplied by 20%. So this will be 36. So 76 for each of the 8 months. in the previous 8 months she has provided such services. So we are allowed to claim input tax on previous 6 month services. So 76 multiplied by 6 will give you 456. So this is our answer, 456. Next question is, what is the maximum amount of input VAT which Alisa can reclaim in respect of her motor expenses for the quarter ended 31st March 23? So the amount spent by Alisa on motor expenses is 456 for repairs and 624 for fuel. So total amount would be 1080. And these amounts are inclusive or exclusive. These amounts are inclusive of sales tax. So 1080 multiplied 20 divided by 120, or you can simply divide it by 6. So 614848 80. So 180 is the amount that she can recover. So the question again is, what is the maximum amount of input VAT which Alisa can reclaim in respect of her motor expenses? She has spent it 456 on repair and 624 on fuel. So total amount she spent it 1080, and on this 1080 she can recover input tax for 180. How it is calculated? Because these 456 and 624 of value is inclusive of sales tax. If the value is given to you inclusive, you have to multiply by 20 divided by 120 to find out your answer. Which of the following statement regarding the due date and payment method for Alisa's VAT liability for the quarter ended 31st March is correct? So if the quarter is ended on 31st March, then we have to consider 1 month and 7 days after that date, and on which she has to make electronic payment. So first option, Alisa must make an electronic payment to reach HMRC by 7 June. No. If you add 1 month and 7 days on 31st March date, it will be 7th May. So first option is wrong. Alisa has the option to making either a check payment or electronic payment by 7 June. 7 June is wrong. She must has to pay by 7th May and through electronic. Alisa has the option of making either a check payment or an electronic payment to reach HMRC by 7 May. Wrong, because she has to make electronic payment. Alisa must make an electronic payment to reach HMRC by 7th May. This is the right option. Next question of general knowledge. Identify by clicking on the relevant box in the table below which of the following item of information is not required to be included in Alisa on a valid VAT invoices. So the customer VAT registration number is not required. This is the first option. That is your answer. Invoice number should have been recorded. Customer address should have been recorded. A description of services supplied should have been recorded.